So how much does the Federal Reserve plan to cut interest rates in 2024, in 2025, and in 2026? I'm going to be breaking this all down in detail in this video because, again, the market was pretty much trading sideways today. So instead of talking about the very boring market, let's talk about what is expected for the next few years. Let's go ahead and jump right into it. Again, I really hope that you learned something new, and maybe if you do, you can consider dropping a thumbs up and subscribing if you feel like I earned it. The first thing that I want to talk about is, well, what exactly are we going to be, covering, and where is this from, right? This is from the Federal Reserve website. I want to make sure that you guys are exactly familiar with where it is that you can find it. So this is the SEP. So it's the Summary of Economic Projections, and you can download this. I mean, this is from the Federal Reserve website where we talk about, if you've ever watched any of my videos, they have the overall calendar. And this pretty much breaks down the projection of what is expected for 2024, 2025, and 2026, and even 2027. But the real big focus that I currently had is because the Federal Reserve cut interest rates for the first time in the last 54 months. Last week, it was September 18th, they cut interest rates by 50 basis points. So for those that are not aware, what exactly does that mean? Super quick. It was really expensive to borrow money because interest rates were extremely high. The federal funds rate is what they like to label it as, right? When the federal funds rate begins to drop, then again, it's less expensive to borrow money. If it's less expensive to borrow money, we should technically be able to borrow cheaper money and therefore encouraged to spend more money. Naturally, markets rise when it's cheaper to borrow money because it boosts our economy. So we went from 5.5%. The Federal Reserve announced a 50 basis point rate cut, which took us from 5.5 down to 5%. So what is the expectation for 2024? Very simple. So according to the federal funds rate, the projection for the end of 2024 is 4.4 to 4.5%. When it comes down to the end of 2025, it is expected to be right around 3.4 to 3.5%. So this is what I want you to understand. We're currently at 5%. So if we're expected to be at 4.4 to 4.5%, that means that by the end of the year, which again, we still have October, November, and December, according to this projection of economic data supports it, because you know how the Federal Reserve always talks, right? Is we will take it meeting by meeting. Those are Jerome Powell, the head of the Federal Reserve's famous words. That being said, according to these current projections, they expect currently at 5%. If that projection is correct, that means that we'll have another 50 basis point rate cut in total in the next 3 months, right? So take that into consideration before you think that they're going to cut interest rates either more or less. So are interest rates expected to drop? Well, according to the SEP that was just released, yes, it is expected to be right around 4.4 to 4.5%. So if you want to sound like a nerd to all of your friends, if they ever ask the questions of, I wonder if rates are going to drop, a little bit more this year. Well, you can say, well, according to the most recent SEP from the Federal Reserve, they expect to announce another 50 basis point rate cut by the end of the year. And that's not expected to be all at once. Remember, a very popular approach is 25 basis points. So that could be maybe next month, that could be maybe in November or in December. And they can, instead of doing it all in one lump sum of 50 basis points, they could break it up into two if economic data supports it. So that's something to look forward to. When it comes down to 2025, think about this. We're at 5.5. We expect to cut another 50 basis points. So we'll be at 4.5 by the end of 2024. From 4.5, we expect to be at 3.4 to 3.5 by the end of next year. So that means all of 2025, according to this current projection, which again, projections always do change, but according to this current projection of 3.4 to 3.5%, they expect to cut another full basis points, right? So that could be one very large one and one small one, 75 basis points and a 25 basis point rate cut. It could be in 4 small ones, 25 basis points throughout the year for different versions of those. Or again, they can split it into those 50s as well. So I want you to understand how they can present them, right? There's always going to be an expectation on the next Fed meeting, which is hosted every single month. And I do live stream those meetings for free on this channel. And I also use the Fed rate monitor tool based off of what the market expects is going to be reported, and what is actually reported is something that we cover on this channel. So again, if your friends were to ask you, hey, well, how much do you think that they're going to cut interest rates by next year? It's not a guesstimate at this point. There's a projection, and you can tell them, according to the SCP that they just released, the federal funds rate shows that their goal and their target is to be right around 3.5%. So by the end of 2024, from the 2025, we expect to drop another 100 basis points or a full point from 4.4 or 4.5 all the way down to 3.5. And then the end of 26, they expect to go from a 3.4 to 3.5 down to pretty much 2.9 to 3%. So again, about 50 basis points is expected in 2026. But that is, of course, hopefully, if economic data supports it. Remember, a really big focus right now for the Federal Reserve is how the labor market is doing. Their target, and again, it also talks about this, their target by the end of the year is to be no greater than 4.4%. I personally think that is going to change. I think unemployment is going to start gapping up, but that's just my opinion, which again, does not have to happen. They expect by the end of 2025 for unemployment to be 4.4%. And then by the end of 2026 to be 4.3%. We'll see, right? But if any type of slowdown begins to actually happen, we really don't have much wiggle room because we're currently at a 4.2% interest rate. 4.2% unemployment rate, which historically speaking is a very low unemployment. So this projection could change, but just remember, this is the current expectation. If they change their projection, well, how will the market react? And that is what is very important, right? So again, all of these breakdowns are always available, and you guys can download this directly from the federalreserve.gov website. And they release these on a monthly basis. So just wanted to make sure that we broke it down so you understood what the Federal Reserve has projected for the next series of months, the next year, and also 2026, and how this could affect the overall market, right? So today we did short NVIDIA, but there wasn't really much movement. And just like I talked to you guys about in today's earlier video, market was pretty much just trading sideways. I made $531, but that is goose egg in comparison to what we really could have made if direction was clear. Market traded sideways, and this is why it's always so important to understand that if direction is not clear, if opportunities are not presenting themselves, remember, your job as a trader is to select the opportunities that you actually take advantage of and to make sure that they meet your criteria, because days like this are just, in my opinion, a waste of time because there truly isn't much opportunity. And if you're under the PDT rule, it can be a waste of your trades that could have been better prepared for or set up for on very bullish or very bearish days where you can go long and go short and overall just make much more money when direction and opportunity is super clear. So again, it pays to be patient in this market. Excited to kick off our live trading session tomorrow. I trade live every single morning, and if you ever want to tune on in to learn more about it, it's the second link in the description down below. And yes, if you sign up today, you can watch me trade live as soon as tomorrow, and it's a one-time payment, lifetime access to watch me trade live every single day, and prices will be going up October 1st. So the cheapest time to sign up would definitely be right now. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.